We are halfway through 2010. Performance for the long Danish bonds, how has that been?
Very good, actually. The return has been 7.5% year to date, and the yield to maturity on the fund right now are 3.5%.
The markets are still worried about the possibility of some European nations defaulting on their sovereign debt. What do you think?
I think it's a very relevant question and a very relevant concern. And we see the market price a positive possibility of a default on sovereign debt. So of course it's very important that we take care of this and we try to protect our investors the best way we can, and we're doing that in long Danish bonds.
The Danish fixed income market, how's that affected in the developments of the rest of Europe?
Actually, it has been a safe haven in this turmoil that's been in the rest of Europe. And the investors, both domestic and foreign, shows confidence to the Danish model, both the Danish economy and the Danish mortgage bonds. So they continue to invest, and that's very good for the Danish bonds.
The Danish central bank recently lowered the interest rate. How does that affect your funds?
Well, the market expected it, so it hasn't really reacted on the lowering of the interest rates. It was done to protect the exchange rate, because we see a lot of foreign investors, they lend in Europe and then they deposit it in the Danish central bank to a higher interest rate. And to stop that flow, the Danish central bank had to lower the interest rate, and it worked.
How do lower interest rates affect the mortgage bonds?
Well, the mortgage bonds, of course, see some prepayment risk now because of the lower interest rates. But that's what we calculate, and that's why we're here to take that risk. That's where the spread is. So we think we take very prudent investments in the lower interest rate environment and in this higher prepayment risk.
But how about liquidity in the market?
Also during this crisis, we have seen a very high liquidity in the market, both in the mortgage market and in the government market. And that highlights the qualities of the Danish fixed income market and makes it a very prudent investment.
And what is the role of the Danish mortgage bonds in that equation?
Well, the mortgage market in Denmark offers very attractive spreads compared to other bonds in Europe. So the way of investing in these attractive spreads, the Danish mortgage bonds, is through long Danish bonds, where we have the experience and the skills to handle these bonds.
When we look at the coming months, the rest of the year, do you think that the long Danish bonds will still be a safe haven for European investors?
There's nothing indicating that it won't. It's a very strong economy, and the investors have a very big faith in it, both domestic and foreign. So there's nothing that says that the safe haven part would go out of the market. Of course, we have low interest rates, and there's nothing that says or indicates that it won't be the case the rest of the year. So with that in mind, I think long Danish bonds is a very good investment also the rest of the year.